All right, everyone. As always, let's test out the sound here. That seemed to work. And then if we do that, what does that look like? I can shrink myself there. All right, how's everyone doing? Hey, Bill. Yeah, it was a really profitable week, wasn't it? Basically, I gotta mute myself. Yeah, all you had to do was not get suckered in short thinking it was the end of the world, which was all we were reading on Twitter. Hey, Jim. Everything's good. Maybe a little bit shorter of a stream. I just have some family over and stuff like that, but it's also a really shitty day out, so I'm not too worried about it. As people trickle in, just let you know what's going to go on here in case somebody is watching the recording or it's your first time here. Just take the end of the week. I go through the markets, what I think of the crypto markets, what I think of the equity markets this week. Then I go through those short videos that you see on the channel. I do like a 1-minute video of a single stock I'm interested in each day. I kind of go through how I traded those, if I traded them, right? Sometimes I trade them, sometimes I don't. Kind of give a breakdown of how those work so people can kind of see after the fact how someone would take an idea like that and actually trade it. Then we scan through a couple scanners here on TrendSpider and some on Trade Ideas to go through and try to find some symbols that I'm interested for next week. And then I go make that video, and then I also prepare this for the Stats Edge Trading Pro people. At the end of this, I'm going to be just showing you guys what a sample kind of day over at Stats Edge looks like. And yeah, so we're going to go through and I'll show you what that looks like. So if you're at all interested in the program, hang out for that. And I'll show you kind of the back end. I'll probably do that, I guess, before I start the scanning just to make it a little bit more accessible. But, and then that'll be it. We'll go from there. So right off the bat, I guess let's first go through I got more requests. I asked people in which order you guys like this. And I got more requests to go through the short videos first and then do the market analysis second, which makes sense, right? Let's put last week behind us and then move on and come into this week, right? So let's start with, what was Monday? Monday was the 19th. So the last one I would have done would have been on the 16th. Oh yeah, I only did 4 this week because I wasn't feeling good one day. That's what I was wondering. So the first one was JanX, which I took, I can tell you right now. So JanX, I was looking at it, I guess kind of on this bar right here, or no, wait, 1, 2, 3, 4, 5. So it would have been on this bar kind of right in here. So I actually took this one as it broke in through here. So I think I must have took it on this day because I entered all of my trades in the last hour. I scalped out some on day 2 and then a little bit yesterday. So I have a tiny bit of the position left, but that was a good one. It was just, straight up, no real thinking needed on that one. And again, the idea was simply, we had this big sell-off since its IPO, and it looked like it had put in a bottom, and then it was just kind of chopping sideways for 4 or 5 days. The candle's getting smaller and smaller and tighter. So, it was just kind of a bit of a no-brainer with trying to take it over these highs and a stop down there. Your risk was just very, very small for a wide potential return. Right, so that's 3 times or so your risk, and that's really all I look at, right? I think everything else is kind of fugazi, a step, you know, what's actually going on when it comes to trading. So AVIR, yeah, it would have looked like, actually, let me just load up these videos real quick. The moving averages, Jim, I use an 8 EMA, and I'm actually playing with a 20 EMA as well. Or 20 SMA, sorry. Yeah, so AVIR was on this candle, looking at the video. I actually did buy some, I think on the next day. Basically, I'm about flat on the position right here. So I'm in somewhere in this area. I can't remember which one, but I haven't done anything with it yet just because there hasn't really been anything to do. I'm certainly not going to risk all the way down here anymore. You know, if we kind of get and close under this ADMA, that's probably where I'll get out. So I generally speaking just use the ADMA as like a guide and a stop loss if I'm on runners. I'm playing more and more with the 20 as just a longer term view. Again, I'm not a real big, I don't think there's any predictive power in them, but more or less for moving averages. Oh, and then there's CODX, which was by far the winner of the week. So I was looking at CODX on this candle is where I made the video. Broke out right over here. Again, wish I got some. This one would have been a monster, but you would have had to been kind of in and out in the same day. Then it's pulled back to it. So now that I look at this, I'm actually going to make a note here on my notepad to keep this on watch, CODX here, because it broke out and then it came back to the breakout area, and it's kind of bottoming tailing here a little bit. So if it's going to hold, like if it's going to break out, come back to the breakout area, hold for a few days, and then go, maybe that second chance is interesting. If we just break back down here, then that was just a fake breakout to get people in. And then last this week was Kroger. I didn't do anything with this, but I actually still like it for the same reason. Kroger was from the TI strength alerts, that the algorithm I made for that, and you know, did great on Monday, and then it's pulled back the last 4 days, and you can see kind of the double bottoming tails right here. So again, you guys know I like the breakout, pull back, hang out for a bit, and then continue, as opposed to taking the initial breakout. And those two bottoming tails are interesting. So I'm adding Kroger here to the list as well. Didn't take it today, but, you know, probably should have, now that I look at it. So that's going to be it for this. There was only 4 videos. Very simple week, but again, we'll get into that in a second. So let's go into crypto first and take a look at that. Again, ask questions as we go. It's kind of why I do this live. Actually, before we get in the scan, let's just go. So this is just a bit of a walk around, again, Stats Edge Trading Pro and what you guys get from that. If you're interested, actually, let me just do that. So this is what the back end of the website looks like. This is kind of the main crux of it, this nighttime scanning and watch list. I also have a video up on the channel too. If you scroll down a little bit, that should explain this. But this is where I put my watch list every night of what I'm looking at, and then also annotate up a bunch of charts about what I'm thinking of the market. I'll show you that in a second. Here's access to my scans through both TrendSpider and Trade Ideas. So you can see, you know, if I can do both. I have to put Star Eater with TrendSpider. I can definitely do that with TrendSpider. I just need to do it. But yeah, these here's the scans, and you know, here's just the cloud links via Trade Ideas. But there's a way to do cloud links via TrendSpider. Like here, I just need to do that. But same thing. This is the squeeze algorithm, right? Just shows you all of these, and I'm going to add to these as they go. Members chat, this just takes you, I'm not going to click on that because it shows the Discord link, but it just takes you to our Discord room where we just kind of zap this in. I don't like showing too much just because people don't talk. But again, it's not a signal service, but we just chat. People say, hey man, what do you think of this stock? Or I'll go, hey guys, there's this event going on and this is how I'm planning on dealing with it. Things like that. Again, none of this is a signal service. And then here's kind of the meat and potatoes. So every night, at night, or if something happens that night, it'll be up by the next morning's trading. I just do a breakdown of the different markets, right? So these are the crypto markets. I just kind of annotate up the charts with what I'm thinking, right? I was scanning all cryptos and I noticed they all have the same look. Here's the equity markets, right? So I say, made it through the downtrend line, all-time highs feel like they're next, and that's what we got today. Right, comments on the different markets, news, indicators, that type of thing, and then the watch list. So, if you don't want to watch the videos, the one in the video is always going to be in the stocks to watch, but I just kind of annotate these up with what I'm interested in, these areas that I want to take a look at them, that type of thing, and then just a general kind of blog post of my thoughts of the market, all of that. Any new algorithms I come up with or anything like that will all be included as well. So just figured I'd go over that for those interested quickly. And then now we will just get into, move that. So let's start scanning through, or let's start evaluating the market and see what happened this week, which I guess most of us probably already know, and what we're going to do into next week. Do you eval all the TI strength alerts? I look at them, yeah. Now there's not, they're algorithmically driven, so they're not, no one picks those. They're picked by an algorithm. But yeah, I always keep an eye on them just because often I find the algorithm might not have picked the right moment, but it did pick the right stock, if that makes sense. So like, the TI strength algorithm, it's supposed to go from week to week, but like Equifax, it called Equifax back here, and I'm still in Equifax because there's really no reason to get out, right? So it picked the right point, but if you just held it for the 5 days, I think you got out like right here. So like any algorithm, I like to use it as a guide. XXII, I think I talked to you guys before. This was one too. When it pulled back right here, I was going to look to buy it. You can see I have a trend spider alert right here. That's where I'd like to sell some if it gets there. But as it pulled back to that area, I bought a chunk kind of in here. Same concept, just that it's I'm timing it a little differently. Even HRB, which was, you saw when I went through that blog post, was one on the list yesterday, came from the strength alerts. But that was, I think, back here, or maybe even earlier. Maybe it was back here. I don't know. But I just like that it's holding up high and it's putting in this nice sideways base. And this was, around the time that everything else was kind of falling apart. So, and then same with Kroger, right? So we talked about this, but Kroger was called right here, would have been the entry point, which would have been a great entry point. But I missed that. But now I'm thinking that if we pull back into it, I give it a chance to hold and then maybe it will go. So yeah, that's just kind of my, I guess it's a rant that you didn't ask for, but that's my thought on trading algorithms kind of in general, is that you take them and you say, okay, there is a chance, there's a higher probability that this thing is going to be higher rather than lower in X period of time. And that's what the algorithm does. And then you say, okay, yeah, but I'm a trader. So I'm going to be able to use my eye and understand news events and market mechanics and things like this way better than any algorithm could. So let me use the algorithm to pick the stocks, and then I will myself from there, go through and pick the timing and the actual trading plan from it. Same way I use Holly, same way I use pretty much all algorithms. I have a very few that are black box, left alone kind of thing. So let's go through crypto first, and then won't be long, and then we'll go into the stock market, and then we'll take a look at stocks. So Bitcoin, I'm still watching this downtrend line that's going on right here, right? it here, 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 and then we broke down away from it and we've come back out and tested it. So the question is this going to be a bounce off through it, or are we going to continue higher? I hope we don't, because if we move higher, unless we quickly get back up over 40,000, which I don't know if you know, we've got all this overhead supply, right? So if we don't quickly get through this, then we could just kind of sit back in this range for a while, and I don't want that because I like trading crypto, and crypto is boring right now. If we look at Ethereum, it's a little bit stronger, but it's not that much stronger, right? So they're all the same look, right? Litecoin, ADA, Doge, Ripple, right? It's just no difference. It's all the same thing. Do I evaluate the TI strength alerts before entry? The original entry. Yeah, the algorithm is tested on. And this is just because you can't, an algorithm has to be this, then this, then this, then this, then this. And it all has to have end dates, and it all has to have all of this, or else the calculations just get way too much. So the algorithm says enter Monday morning, hold until the next Monday morning and exit, and then buy the new stocks and hold those for Monday morning, and so on and so forth. And again, if you were a brand new trader, I would almost suggest doing something like that, but then watching and playing the what if game, saying, listen, I followed the algo and this is the results I got. What if I had used this exit criteria or that exit criteria and optimize for that and kind of play around? But yeah, my mentality is that I look, when the new ones come in, I look at them and I try to figure out areas, and we put those in the emails, areas to buy and sell them. But then I just say, okay, I'm going to wait for these things to occur. And sometimes the new email comes in, but I write the email. So I write the new email, and if I'm in a bunch of stuff, I'm not going to sell anything just to rotate into the other one. Like if I'm in stocks and those stocks are doing well, I'm not just going to sell those stocks and go buy new stocks just because, right? I'm going to give those ones the reason for entry, but then keep the new ones as a list and say, okay, if I exit this one, these are the ones that I'm interested in buying kind of down the road. So that's crypto, just nothing. Just if you're a crypto guy, the only suggestion I have to you right now is just wait for something, right? If we go back to Bitcoin, like I took a small short, I think right here, got out a tiny bit right here and stopped out the rest back here. And that's just almost not worth your time trading like that. So basically what I was looking for is a close under this support, which we got here. And then, right, I got some continuation the next day, and that was all good. But until we can kind of break out and hold below kind of 2950 or 40,000, I just don't think there's anything there in crypto, unless you're one of those people who want to trade a range. If all you do is crypto, because I know I don't have many, but I've got a few people that all they do is crypto, just zoom in, right? It's just not the time to be trading on the daily chart because that's in a range, right? Zoom into, maybe an hourly chart and look to see if you can take trades in this within this hourly chart, because then you at least get some moves. And that was kind of right when we zoomed out to show you those trades that I took recently, right? I think I entered one under this hourly base, and then I exited the rest as it broke out of this hourly base, right? So that's just kind of how I look at this as an instrument. So let's now go into stocks. So the SPY, this was great because if you guys watched the last video, last stream, and if you don't believe me, go look at the last stream. I just highlighted this area right here and said, listen, 120, 425 to 420 is probably around there. That's the area to watch. And that was on Friday. So on this candle, we gapped down into that area and kind of put a bottoming tail in right there. So from there, lifted off that support, kind of textbook exactly what you want to see in a strong market, right? And we talked about this when I talked about all the stocks that I'm interested in, right? It's a breakout, pullback to support, a hold of support, and then continuation off it. It just, for me, it gives you the best risk reward because you know exactly if this thing curled over and broke this low, you know then you should get out. And then if it reclaims support, get back in type of thing. What's kind of, the QQQ looks the same, right? Just gap down, rocket from there. The IWM is kind of what's concerning. And that's just because, not because the IWM has any predictive power over the SPY or vice versa. It's just not the way the market works. But most of us as shorter term retail traders, both day traders and short term swing traders, we like the IWM because it's your small caps, right? It's your small caps, micro caps, that kind of thing. And that's obviously, if we take this and we compare it to the SPY, right, IWM, it's just been in this range for God knows how long, right? Up and down, up and down, up and down. So relative weakness to this, right? We notice the SPY cranked out to all new highs. This one, it's not actually even that it's just in this range. Again, drew this triangle out as the area of support, seemed to act perfectly, but it's not even in the high end of its range. I'd almost forgive it a little bit more if it was up here somewhere, but it's kind of in the low end of the range there for sure. Give me just half a second here. I just want to check something. Okay. I just had to bring something up. Wanted to make sure no one saw it there, so that's fine. So, right, this kind of concerns me a bit. So, again, I am going to try to focus a little bit more on, even though I don't like trading them, is the larger, slower kind of mega cap type names as opposed to the shorter term kind of micro cap type names. So that's the game plan with that anyway. Right. So next, I always like to go into KoFi here, and I like to look at this particular chart. So this is a good way to I always feel like, I know it's kind of pretentious, but I always feel like I should put my CMT there into the thing. I don't care about my Kaya. It's up there. It can stay up there. It's useless. This is confusing. So actually let me do this. Perfect. Just to get myself out of the way. This is basically just a line chart of all of the different sectors that make up the SPY stacked on top of each other, long and short. What it is, for those who are new, what we can tell from this is, what we try to tell from this is, where is the money flowing into, where is the money flowing out of, back and forth with that type of thing. So the top performer this week is XLC. If I hovered, it's supposed to. Yeah, so you can see on the, if I move my mouse, it'll mess it up. But on the top kind of middle of the screen, it says communications there. So as I highlight over them, it will tell you what sector it actually is. So communications, again, a lot of people think like Verizon, AT&T, things like that. It's not that anymore. It is more about Snapchat, Facebook, Twitter, that type of thing. And this is another thing that I really like about KoFi. I can go XLC, and then I can actually say, what is holdings? I can say, what's in it? Right, so with this, we can see that the largest weighting here is Facebook, right, with a 22%, and then Google is another 24%, right? So basically this index is Facebook and Google, mostly. The rest of it, Comcast, Disney, that type of thing. But so that's our winner of the week. That's the thing that is the, oh no, this one. There, that's the things that is the top winner of that week. XLY, oh, the right edge. Yeah, thanks. Consumer discretionaries. So with consumer discretionary, just think of things that aren't necessary, right? iPhones aren't necessary. Harley Davidson's not necessary. Generally speaking, both of these things will increase. XLY and the next one here, which I spoiled, XLK. Both of these things go up when people are expecting, supposed to be bullish on the market, strong economy, all that kind of stuff. So this just shows me, these top three things just show me that people they're not pushing their money into utilities and energy and materials, which is more or less what we'll see when it comes to these type of issues, right? So if we, for example, take off U.S. sectors and add U.S. industries, which there's way more of, we can take a look and we can see home builders are killing it. Internet, doing great. Software, doing great. Semiconductors, right? So all of these things are not super necessary. And then we go down here, we see gold miners, we see oil services, nat gas, regional banks, right? So basically what this is just saying that people are feeling good right now is kind of what I get from this more than anything else. And that's really all I want to look at, because then I like to go back into here and I like to say, okay, well, what were those sectors that were interesting? And I say that as my old ass man forgets. XLC, XLY. I always like to look at the top two and then the bottom two. So XLC, again, we know this is mostly Facebook and Google, so it makes sense that it's breaking out here on the same day, right? Look at the correlation of these two symbols, right? They're pretty spot on. Then I want to look at XLY. Not quite at all-time highs. And this is actually going to be a little bit concerning, I think, that we made this massive run all the way up to this resistance point. So it wouldn't shock me to see a pullback here early in the week as we digest that news. And then the bottom was XLU, which is our utilities. And see, that looks bullish to me. And then XLE, yeah, that's still hard. That's still having a hard time. Just get rid of that, move that. So it still has a lot to go, right? It's got to get over this area from underneath, and then it's got to get over about here, and then it's got to get over here. So there's a lot of overhead resistance it's got to get to and through all-time highs, which is interesting. So that's a bit worrisome. So question, new to trading, my account's 10K. On average, how much is good for each trade? So I am going to give you, first of all, no one watched this. It's like all these videos I put like extra time and energy in, no one watches. But if I rented a Lambo and just said, hey guys, I'd get billions of views. I get why people who are, I don't know, less morally sound could very easily lose their way. But that video I just posted is how I deal with risk, and this is regardless of account size. So watch that for later. But essentially how I just put it is, it doesn't matter if your account is 1,000, 10,000, 100,000, or 1 million. Your risk should always be a % of the value of your account. So for you, and when it's a small account, I would say never more than 2%. So you're talking $20. So you're risking $20 on a trade. No, wait. That's 200? Yeah, that's 200, right? Yeah, 200, sorry. Yeah, so your risk is at max 200. More probably better to be 1% to half of 1%, so $100 or $50. And then what you do is you adjust that. So say you start trading with $100 risk, which is 1% of the value of your account. Again, it's late. I'm already into the Trulies, so I want to make sure the math isn't too hard. I feel like the way they make you hold this to drink it, it's like you're sponsored. But I'm not, unless someone wants to send me some. So you're like, okay, I'm going to risk 1% of the value of my account, or $100. And I'm going to risk $100 on each and every trade. Let's actually, I'm going to do this, and I'm going to open up that. I'm going to make that large, so I can draw. I'm telling you, man. TrendSpider comes out with an iPad app. Trade Ideas comes out with an iPad app. I live my life from my iPad in the hammock. I love this thing. Right, so you take the value of your account, call it 10K. And just to make the math easy, again, I would say max 2%. Max 2%. But to make the math easy, 1%. I usually float around half of 1%, but I'm piker, I guess is the word. So 1% risk, that is $100. So then you say, okay, I'm risking $100 on every single trade. And what I'm going to do with that is, so say I'm going to buy a stock at $10, and if I'm wrong, my stop is $9. So I am risking $1 per share of this position. So then I take the $100 and I divide it by one share, and just because I'm old and tired, and that's how the math comes out, I'm going to take 100 shares in that position, because then if that position goes bad, I lose $1, or I lose $100, or 1% of the value of my account. Hope that makes sense. So say you're doing that for a period of time, and then all of a sudden, once a month, once every 6 months, doesn't matter, you pick a time to reevaluate your account balance and then recalculate this number. So say now you did a really good job over the last year or whatever, and now your account's 15,000. Well, you still apply the 1% rule, right? And that comes out to $150. So that same trade where you're buying at 10 and you're stopping at 9, right? So you're risking $1 a share. Well, now you're taking 150 shares instead. So your dollar amount increased, but your percentage amount always remains the same. So this has a couple effects that are kind of the whole reason for it, and why I think this is, maybe the most powerful concept in trading that not a lot of people talk about, is that as your account increases in value, the dollar risk you take increases more and more. And, say in 10 years time, you've grown this $10,000 account into a $100,000 account. Well, now you're risking $1,000 on every single trade to make hopefully $2,000, $3,000, $4,000 on every trade. But psychologically, you haven't really got hit that hard, because it's that whole analogy of boiling the frog alive, right? It's morbid as hell, but right, if you take the temperature, and I'm sure this is like an urban legend, and you slowly increase the temperature on the frog, it's not going to jump out of the pot. It's just going to sit there until it boils alive, right? But if you just take it and just crank up the heat on it, it will pop out right away. So that's a benefit. The other benefit to it, if you're a newer trader and you're going on the other side, well, what will happen is as long as you stay disciplined, you can never burn out. Because unfortunately, let's say your $10,000 is worth $5,000 in a year. You had a bad year, right? Well, now you're only risking $50 a trade. right? And then if your account value is 10,000, well, you're risking $10 or 1,000, you're risking $10 a trade. And as it goes down and down and down, you're risking less and less and less. And then as it increases, you're risking more and more and more and making more and more. So even because no account goes, right, I'm a good trader, my account goes like that. I'm a bad trader, my account goes like that. It's not, I've shown people, probably people in this room that were mentorship clients, my equity curve. And my equity curve always looks like this, right? So during these periods, I'm starting to trade less and less. During these periods, I'm starting to trade more and more. So I push it as things go, right? So again, I hope that makes sense, but that's how I look at risk. It doesn't have anything to do with how much you put in per trade. It has more to do with has more to do with what is your risk, right? Because that's everything with trading. Best traders in the world, I don't even put myself in the best traders in the world, but best traders in the world are maybe 60% accurate over the life of their career, right? They'll have periods where they're on fire, they'll have periods where they're not, but the best traders in the world are right 60% of the time. So, you could be right with a coin flip maybe 50% of the time. So then what separates the good traders from the bad traders if no one really has an insane win rate? Well, that's the management of risk. So that little thing that I told you, again, is I think the most important part of all of trading. I bet you could, I was saying, I think it was to Brett earlier, but we were just chatting, and I basically said, I think you could pick a trading strategy at random that was trend following in nature and slap a 2-to-1 risk reward ratio on it. And that method of increasing and decreasing risk as things work or don't. And you would be profitable in the long run. You'd grow that account just like nearly sheer randomly. And that was a super long rant that you probably didn't want, but let's get into some scanning. Let's pop over to right here, and this is why I actually have the camera. I just gotta put my face right. There's some stuff that can't know. And again, please ask questions as they come. That's kind of again why I do this in person instead of not. So basically, we are looking for pullbacks in strong stocks. We don't want to really get anything that's pulled back too deeply, because if it's pulled back too deeply over the last 4 days where the market's been straight up, that means it has relative weakness in comparison to the market. So we need to go through and again, make sure that whatever we're taking is not pulling too far behind, right? Yeah, I'll take a look at your stock for sure. If anyone wants, so I'm going to do some scanning from now until top of the hour where I'm going to end it. If you guys want me to look in and evaluate a name for sure, let me know. But yeah, so we're looking for either things that look like they're going to break out from maybe a rounded bottom or strong stocks that are pulling back. I will give more points to stocks that I think are more S&P 500 stocks and less IWM stocks because that's been doing better. I guess I didn't summarize my thoughts on the market is just you can't be bearish right now, right? The IWM is the concerning bit, but the fact that no one's funneling into things like energy and utilities makes me think there's not a lot of fear out there. So GLOP is interesting here, but we have earnings on the 27th. So that's Tuesday morning. But if it got back over here, it could maybe make another leg. ENVB. That looks gross to me, to be honest. Hey Grant, I'm gonna do more of this. I just found out that like when I open this, basically it just pops it over. I know there's like one other tech nerd, but it just instantly pops it over to my iPad. So as I draw on the iPad, it does that. I just think that's cool. That's why, again, the Stats Edge trading product, you guys have noticed there's been so much drawing on the chart, because I just sit here, take pictures of the charts I'm interested in, the way they go from there. But right, the way I look at ENVB is that it's, you know, closed at lows right here. So it had a small bounce, and it looks like that bounce might be coiling over. At the same time, it's under 2, right? And you can see 2 was support right here and right here, and then it was resistance right here, right? So it's acted as support, and now it's acting as resistance. So 2's a rough one. Every bounce that you're seeing here are coming in at lower and lower prices. So it means that the buyers are not able to push it up, right? They push it up a bit. People come in to say, okay, crap, I'm going to get out. Away they go. And people come in, they go, okay, I need to get me out. So this kind of low right here on this last hammer is the last thing that is interesting to me. So if we break that, I think you're like, all bets are off at that point. I'm looking at the single stock window that's right behind this. I don't see anything there that's interesting. It's not a heavily shorted stock. So no, I just don't. It's just not interesting to me. And this in and of itself could be a descending triangle that we broke out of, came back and tested the bottom of, and then we're going to sell back off. So if someone, right, put a gun to my head and said you had to trade this, what's your trading plan? I'm really just looking at this $2 area and saying, if we can get above and reclaim $2, then I'm interested in that. And then my stop would be right here. But the way I look at it is, right, if you get over 2, then, well, then you got to get over here. And then you got to get through there, right? And then you got to get through there. And then you get, right? So there's just a lot of overhead resistance, overhead supply. So yeah, you're right, Mike. I should plug my back to basic videos. So if you're a new trader and you're interested, this is a free free thing. Ooh, not that one. Right here. So that is a free trading course that I made with the help of Trade Ideas, where during lockdown, me and my wife sat down. She's a dental hygienist, never traded before, and we just went through, this is a stock, all the way to risk management, trading plan building, statistical, technical analysis, whole 9 yards. That is free on the website and will always be free, because Trade Ideas basically paid me to build it. So, and they're giving it to you. It's also on the Trade Ideas website too, I think. I just like it when people go to my website. All right, so let's take a look. So this particular scan is looking for multiple dojis, which is becoming one of my favorite, right? I joined during your rant about risk. I love how you called it a rant, because I call them rants as well. Again, anyone in Stats Edge will tell you I'm a tangent ranter. People ask me a very simple question, and 4 hours later they'll get an answer. I really got to get better at that, but no problem. That's what I'm here for. I like doing this stuff, right? I like streaming. That's why I created Stats Edge Pro, because I'm like, I'm doing this work anyway. Maybe people will pay to look over my shoulder and watch me do this work. And there's been some. TIL, I can already tell you, has been on watch. I think I put this on watch yesterday. And this is an interesting anchored VWAP lesson, but it's something that I am super, super interested in. So we can do an anchored VWAP rant. And again, if anyone's interested in any symbols or whatever, you can go right ahead, because to be honest, I've done a lot of scanning already today, so I kind of know what's up. But I like TIL, because it's got a 20% short float, which you can see right here, right? So that's 21% short. So if it gets going, it could get going, basically. This purple line that I put in here is the anchored VWAP from the IPO. So what this means, and if you want to learn more about anchored VWAP, please check out with Brian Shannon from alphatrends.net. He's kind of the godfather of this. I have over there his signed book. Like, I've been watching him on YouTube. He's one of the main reasons, if not the reason, I have a YouTube channel. Watching him doing his nightly analysis forever. But anyway, he's kind of coined looking at this anchored VWAP, this purple line right here. And what this is basically takes price and volume and combines it to give you an accurate description of where the average market participant is. So from the IPO of TIL right here, the average market participant is this line. And this line goes on as time goes on with volume and price being added in. And you can see it's acted as resistance before. So that's kind of the top anchored VWAP. And then the bottom one, which I put in, it's right there, that's anchored from this low right here. And it's showing that, so the average market participant from these lows, the dip buyers, they're right here. And they're up money and they're happy. And the average market participant from up here is sitting right there and they're kind of mad about it. So what often you get is, I've seen the guys at TrendSpider call this a VWAP pinch. So it's getting tighter and tighter and closer and closer. And again, you can see the times it acted as support here and then the times it acted as resistance here. Then if, basically I'm looking to see if it breaks 20, the other thing I note is that 1, 2, 3 days in a row are all dojis. So there's just, when I look at this chart, I see that this VWAP pinch represents indecision. It's the market doesn't know what to do, right? It's got this upper bound of sellers keeping it down. It's got this lower bound of buyers keeping it up. And then if you zoom in and you see these 3 candles right here that I marked, they're dojis, and that represents indecision. So we've got indecision stacked on indecision stacked on indecision. That combined with a massive short float of 21% basically makes me think that if this thing pops through here, then it could be a nice mover, and then you've got an obvious place for a stop right there. So that's one that's interesting to me. And again, I just wanted to note because of this, all right, this AVWAP pinch that's going on here. Yeah, Sam, you found it. So that's something that I'm interested in when it comes to this TIL. I think that would be a good one. And again, that's from this scan, which is just looking for multiple dojis. So 2 dojis in a row, which is the limit to what Trade Ideas can look for. I'm doing a lot of testing on this, a lot of trying to see, because quite often these multiple doji signals, if they're pure, like a lot of these don't look good. I may try to rebuild this on TrendSpider, see if it's a little better. But what I've noticed with a lot of them is that it will mark turning points, because you have a stock move somewhere, have a bunch of indecision in that area, and then back off that area. And I'm really trying to get better at pullback trading. So this is interesting. So here's another one, right? Another IPO early price. And so I anchored a VWAP from the IPO, and you can see it's right there. Right, so then also, it looks like this $12 area seems pretty important for the stock in a couple areas. So I'm interested in if this thing, I guess, could pull off $12 and push higher. I think that's something that's super interesting for this stock. So I would watch, call it 12.50. And if I got triggered, I'd probably put my stop basically under 12. Right? If it got back under 12 after breaking out of kind of 12, yeah, 50-ish, go from there. So question, so when you're building strategy, like with the VWAP pinch, do you build it with like if-then statements? Yeah, I really, so for Tyler, first of all, the trading, how to build a trading strategy. If you're already to that point, I'm going to replug this course. You might want to skip just to the end. Like the last a handful of videos are going to be more or less about that kind of thing. After I've taught her, the basics of trading, it went into her building a trading plan. And we walked through that process as well. But you're more or less right that when it comes to if statements, right? There's an old saying that I say all the time that's basically you don't get smarter when people are shooting at you. And it's just an old military saying that a client told me that basically just says, you got to have a plan before the bullets start flying. So all of my trading is built on if-then statements. They get very complex as your trading strategy gets complex and all that, but it's all the same process. So for TIL, it might look like something to the effect of, oh, the music in my ear's trash, sorry. I gotta go back to my Foo Fighters playlist. I've been on a Foo Fighters kick. So yeah, it will look like, for example, if TIL closes over $20, then buy some with a stop under here. And then if it breaks back under 20 and closes, maybe exit and put it back on watch. Or if it, makes a move 20% or more in one day, exit part of the position. So you have to not only have an if statement for entry, but then you also have to have an if statement for exits, right? You got to have an if statement for what to do if something happens, right? So if this, then this, if this, then this, and it should be pretty expansive as things go, right? Because again, there's pretty much every scenario that you could potentially think of has a chance of happening. So this is just a general short float scan that I like to look at of stocks that are super heavily shorted. And this will probably be the last scan that I'll do. So again, any chart requests, any other comments? FSR, just FYI, this is going to be what the video is about. I saw this earlier in the day. I like that this bounced off of this area. So it was an area here, it was an area back here, and it was an area over here. And it bounced off that and it put in a little pullback today, but it's got a 24% short float. So that's one that I'm going to be super interested in. How to exit a trade properly. Thanks. No problem. And I'll just let you know, exiting the trade is the hardest part. If that's where you're stuck, that makes perfect sense, because I think risk management is by far the hardest part of the game. It's easy to say this is what I'll enter in. It's easy to say this is what a stop loss, like those live trading videos that I've done, I'm going to do more of. People seem to like them. But the problem is I should put a loser every time I put a winner and just put it at the end of the video, because losing on trades is simple as well, right? You take out your trade, you put out your stop gets hit, that's it, you move on. It's that how do I exit winning trades that becomes the hardest. And you just have to develop a system that works for you, but know that system will always be flawed. Like you're just never going to nail the top, right? I guess Fubo would be a good example. We traded Fubo back here. So I took a great trade on this one and got a 4 or 5 day run out of it. And then I think I sold the last bit of my position right here. So I missed from, let's call it 31. I'm doing this off memory, to 35. So it's like $4 or 10% plus off the highs. And I'm like, oh God, that sucks. But you know, if I just sold it up there, then it could rocket to 50 and then I'd feel right. So it's just, you got to know that whatever you're going to do is wrong and just be all right with that. Whatever makes the most sense to you. Some people do a hard stop loss and a hard profit target. I think that's fine. Some people do a trailing stop. I don't like just the lazy trailing stops, I call them. Every time the stock ticks up a cent, this ticks up a cent when the stock reverses, like that. Those kind of traditional ones, not I don't like those. But like based off of candlesticks or trend lines or moving averages or something like that, I think makes way more sense. If you see that it goes to your stop, if it goes halfway to your stop, would you reduce risk? No, I don't touch my stop until or unless it gets stopped. I'm just very, the more I micromanage things, I find the worse things are. The more I just say, here's my trading plan, there we go, now I just got to sit back and execute it, the better I do. So this GPRE is interesting. It's a bit of a slow mover, but it has a 20% short float. I don't know if this is ready yet, but it may be in the next couple days. It has this kind of sideways chop after this big strong move up, and it's just been kind of in this general uptrend. So if we kind of break and clear, I don't know what we call it. So I'm going to watch, say 34 with a stop. Worst case, you're talking, what, 30? So you're talking a 10%, 10% stop on that one. 21% short float. So at some point, these guys have got to get nervous because, yeah, this thing's been a monster. Yeah, at what point do those stops go, oh shit? Or those shorts go, oh shit? Man, I'd like to be in one of those AMC one day, but we'll see. All right, guys. So give another second or two for questions. I'm not going to go too much further down this list. Once I get under about 15 or so percent short, I'm not interested, and I'm going to go. It's actually starting to brighten up. I don't know if people have noticed that as time has gone on this stream, but it's actually brightened up and got a little nicer out there. This ENVB, I've had it on watch forever. I guess I just leave it on watch. Like, I need a close over 26. That's what I need. Just a close over instead of a breaking and kind of tanking from there. But we'll see. All right, guys, I'm going to end that here. We got a chart request. I'll do this one. I'll take off. Rada. This one looks better, right? For a longer term one. It's choppy, but at least you've got, it's bullish, right? It's at least strong, but yeah, it's kind of, it's a little too choppy for me. It's a little too ugly, and it's hard to quantify, other than the fact that from here to here is like 77 cents. And TCON. We'll do TCON, and then that'll be it. No. I want to test these, though. These gap downs that are under, like, everything, and then start to show some strength. I haven't tested them yet, so I don't know. But in theory, there's no resistance from kind of here to here, right? So that's encouraging, but I just wouldn't pop on that. And then again, before I go for the Stats Edge Pro, guys, I've got most of it done already. I did it because I knew people were coming over. So it might be later tonight. But if not, right, it'll be sometime before Monday. I have all the stuff. I just got to throw it together. So it depends when I get a second to do that. If there's any questions, you can always reach out to me on the website. Thank you, everyone, for coming by. I am going to take off, and I hope to talk to you guys soon. But trade safe out there. Peace.